Portfolio Builder members, market goes crazy from a Trump tweet that him and President Xi will meet on the sidelines at the G20 meeting. Meanwhile, the Fed is expected to hint at lowering rates tomorrow, as the bond market has already priced in about 75 basis points in terms of the Fed lowering its rates over the next year. So everyone expects that they should signal that they will begin doing this by July. And if that doesn't happen, we could have some serious issues. We could not only have stocks pull back from near all-time highs, we could also have the bond market rethinking how much money has flooded into there. So some big risks in the market. If everything goes smooth, if we do get some sort of truce in the trade deal, I'd expect markets to explode higher. And that's if also we get the dovish Fed. On the other hand, if we get the hawkish or neutral Fed and just uncertainty on the G20 deal, which I think will be China's play, is they're just going to keep playing dumb and trying to delay until Trump loses his temper here. So they're trying to see how close can we get this to the new election without actually conceding to anything. So that's what I'm expecting to happen. So if I'm right, it'll be very difficult to get anywhere near breaking through all-time highs and maintaining those prices. So if you're long stocks or bonds, might be a good time to take some profits. Our portfolio went from 14% last week to 14.65. So a nice 0.5% gain. That's our target profit in these trades. And we're leaving our hedge open. So hedge started at $1, it's down to 25 cents. And again, the hedge is purchased with a portion of the profits we generate from selling our covered call. So right now we know we're in a time of uncertainty and high risk and market manipulation. We have two major powers gearing up to go to war, and typically what happens is both the countries will print money to no end to try to protect their financial markets and put pressure on one another economically. So that's kind of my outlook. If I'm wrong, we're not going to lose. We're going to make our same boring return and be able to sleep safely at night thanks to all the hedges we have open. Now, if I'm right, everyone else is going to really get hammered. They're going to lose a lot of money, and our hedges are going to come to the rescue and generate a slightly larger return. So what we're really doing is finding a way to finance free bets that the market will go lower and not lose if it doesn't. So that's kind of hard to do unless you follow our strategy. So we take on the risk of purchasing a specific security. In the Diamond program, the security I think has the best strategy is Apple. It's not at its all-time highs like Microsoft. It's the biggest position in Warren Buffett's portfolio at Berkshire. It's tied with the biggest position in the QQQ, and it's almost the biggest position in the SPY underneath Microsoft. Now, of course, Amazon's up there too, but this portfolio is not trading Amazon just because it costs $1,800 a share, so you'd be in for $180,000 to follow that strategy. Now, if you do have around $400,000 or $500,000, it would be smart and prudent to put half of your trade into the Tuesday alert and then put the other half into the Thursday alert, where we're going to get out of Google and focus on Amazon. So we'll talk about that more on Thursday. Today's trade is to buy to close the Apple June 21st, 2019 187.50 call option. So you are going to buy the covered call back for a loss. That's great. That means Apple delivered the profits on the underlying asset. We still hold the asset. It has gone up in value. The next part of the trade is to sell to open the June 28th, 2019 200 call option. That's right at the money, so that's the maximum premium we can generate and still have a relative strong downside protection from the covered call. And then we're going to take part of that profit. So we're collecting around $3. We're reinvesting around $1 into a longer duration. That just means more time, farther out expiration. So we're buying to open the July 5th 187.50 put option. And we're going to leave open last week's put option. So if you have it, keep it. If not, don't add it. You're already going to have enough protection. And now I have actually 3 put options on Apple that I've just left open from the last 3 weeks of trades. So if you have any puts, they've lost most or all of their value, which is reflected in this P&L. But they do have a good chance of spiking up and at least getting closer to break even, or even generating a profit if we get a sudden scare in the market. Now, the reality is I don't think Trump will raise tariffs until sometime in July. And there's a risk for anyone betting down that they will at least delay this escalation from a side meeting in G20. But I think that's highly unlikely. And so that's why I've begun playing it safe well in advance. So I've been on the record saying, hey, I don't think he's going to do anything till after July 4th, so that he's shown the public he's given the Chinese all the time. Now, Larry Kudlow was on news yelling and hollering that the Chinese aren't even responding. So I really think there's little to no chance that a trade deal will be accomplished. And we'll go into some of the horrific things that the Chinese have been doing in the evening update, and that'll give you better clarity as to how their countries ran and why there's really no chance that you can go in there and Americanize a socialist, communist dictatorship. So that's what they're trying to do, and it's just not realistic. Okay, so in this portfolio, it's a 150K model portfolio. It has 8 contracts, so that means I had to purchase 100 shares of Apple. So that's the first step. And again, we don't want people to take the trades until the trade alert's out, because we're doing it with a lot of protection. We're not trying to get lucky picking stocks. We're trying to pick the best investment to build a business around selling call options and hedging risk. So we're more like a bank trying to manage risk and have a consistent flow of customers and clients and let them either get rich or poor with whatever idea it is they have. And so in this business model, we know that Apple's a highly in-demand product that people want to borrow. It's not reached its all-time high, so the call option folks are crazy. They don't care about the macro picture. They care more about technical analysis and just betting that Apple will go back to its highs because the market's getting near its highs. So there's great premium for people who want to speculate on Apple. And because of that, it allows us to own an asset that we trust has longevity and then generate profits that are safe from writing these covered calls. So today's covered call is relatively aggressive. It's right at the money at the $200 strike, which means we're going to have a bigger profit. If we're wrong and the market goes higher, we're going to pull away a $3.42 profit on this trade, which is a huge week-over-week gain. Nothing wrong with that. We also now have $3.40 of cushion to the downside. So if Apple were to drop a few dollars meaningfully on some sort of fundamental news, we would then be able to buy back this covered call for a big profit, and guess what? Sell another one. So if we need to, I will issue an emergency alert for the Diamond Club members to cover this covered call for a big profit and write a lower strike. Now, my anticipation is currently, and this is becoming a little more flawed this morning, I was going to add into this trade setup a long gold trade because I think the Fed really needs to lower rates for a number of reasons. But with the stock market at all-time highs and retail growing 12%, there's not enough weakness really out there to justify this rate cut. So that's going to give Trump a lot more ammo. He's at all-time highs. The Chinese are not going to Americanize. I guess that's a good thing. That's just a good way to summarize what we want. We want them to Americanize, Europeanize, take on these Western values. And I don't think it's going to happen willingly. And people think that President Xi has all this power to make that call, and the truth is he really doesn't. So we'll start looking at the organization of government and how it's really controlled by this Communist Party in our evening updates, because I think this is really critical to being able to predict the risks, not just this year, but really going into the future. This is going to be a long, drawn-out march, as the Chinese say. So the next trade is a little bit longer. These put options lose their value quickly, and they depreciate as the time decays as we get closer to the expiration. So the strategy that we're basically doing is buying a put option that has one extra week of duration so that we can potentially sell it while it still has half of its life left. And so if we can do that, if the Apple doesn't even have to get below 187.50 for this to generate quite a substantial profit. And if it goes below that, then the profits really start to grow exponentially. So if the market goes higher, this put option will lose value. That's not a big deal because it's only a small part of the potential profit we have on the covered call. So it's less than a third of the potential profit. And if we do see some downside risks, we will simply buy back this Apple covered call and sell a new one. So we're going to constantly protect that underlying asset during this very risky time period, and also have this leveraged insurance to the downside. So that's the play right now. I wanted to go long gold with the call option, but I'm really skeptical that the Fed is going to hint at dovish commentary tomorrow, because two big things. One, stock market's not showing any signs of trouble, so why would you cut rates as we're going into all-time highs? And then two, this trade war is now being hinted at having a resolution. So I think they're going to have to be patient and wait. The Fed tends to react to stock market pulling back, even though they're not supposed to. They're supposed to stabilize prices and create this, this silly 2% inflation target. So that's the trade alert. We'll have a big update this evening. And we got the Fed meeting tomorrow. Europe went ahead and signaled more ease. So Chinese are easing. We've seen the Fed tend to actually kind of copycat whatever the Chinese are doing, just a little delayed. And so the Chinese are certainly loosening up monetary conditions. The ECB just did that today. So there's a good chance. There's a good chance all these banks are just getting ready to turn on the printing press and get ready for a trade war with China. That seems to be where we're headed. So if that's the case, the gold and cryptocurrency play will really do well. And speaking of which, just a quick look at our crypto portfolio. We're still long the positions: Bitcoin, Ethereum, Litecoin, Bitcoin Cash. Half the portfolios in Bitcoin, 25 in Ethereum, 21% in Litecoin, and 7.5% in Bitcoin Cash. Our recommendation of where to hold this is over at Robinhood. We're not trying to store these cryptocurrencies and go sneak around the government. We'd really like a easy, safe way to hold them and sell them into dollars when they're overpriced. So I think that this is a pivotal moment for cryptocurrencies, and get ready for some impact. There could very well be pullback in cryptocurrencies if the Fed is not dovish or neutral tomorrow, and if the U.S.-China trade war shows signs of easing. So that's my expectation, to be ready to take some profits or even get out of the way. Now, on the other hand, if things escalate and the Fed is dovish, then I think gold and Bitcoin are headed to new highs for 2019 at least. So that's kind of my outlook on that. Whale Club comes out Thursday, and we're going to get out of Google and just go completely on Amazon right now. Google definitely has their hands dirty with a lot of civil abuse related things that has to do with censorship primarily and spying on people. So I think that there is some dirt that's going to be uncovered on Google and potentially create some risks. Plus, the option premium is not as good of a deal on Google as it is on Amazon. So I think our play on Amazon will be a little more profitable and safer during this period of time. So we will have the max profit on those two trades on Thursday, unless we get a serious pullback. And so that's our trade alert today. Here's a look at gold just to wrap it up. So we can see gold does really well during periods where market expects lots of money printing, which was '08. Of course, it just kept rallying all the way to 2010, which was pretty impressive. And then had a pretty serious sell-off for really from 2011 all the way till today. So those long gold folks have been sticking to it for quite some time, and they're at a point where this could just very well break into new highs. So it all relies on all the central banks printing money and tensions escalating, which I think is most likely the outcome. So we're playing it safe, being patient, having a lot of downside protection, not being greedy. The market's being greedy, obviously, euphoric. And what's the saying? Be fearful when others are greedy, and greedy when others are fearful. So that's what we're trying to do here. Thanks again. Look for the next update later this evening. Most likely there will be no actions to take as the market is partying. Okay, talk to you soon. Bye.